Hello, everybody. This is Troy. I'm a senior account manager with AvaTrade. We'll be getting started with the technical analysis webinar at this time. Before we get going with the details of everything, let's do a quick systems check. If you would, just type OK in the chat box if you're hearing me clearly and seeing my screen all right. Okay, just waiting on a few more responses so I know we're okay in all the regions here. All right, looks like we're up and running fine. Thank you all for joining. There's a lot of fundamental news today driving the technical movements on the charts. So as we get started, we'll take a quick look at the big news today. Some of it's quite obvious what it is, and there's some other news that maybe you're not aware of that we'll take a quick look at as well. Some of it already happened, some of it happening very soon. Some unpredictable and some quite predictable. So we'll take a look at that, and then we'll get onto the charts. We'll do some technical analysis on the live charts. Chi, if you're not seeing the screen, maybe check something on your end. Everyone else is up and running. Okay, as we go forward, keep in mind, as always, investments obviously have risk. Trading Forex, CFDs, spread betting options also entails risk, obviously, but also the reason why we're all here is there's the potential for nice profits as well. The idea is, how do you manage your risk? How do you handle your risk? And we'll go over some ideas about that as we go through the setup on the technicals on the chart. We'll talk about some different ideas about risk management. Keep in mind that what we cover is meant to be educational in nature and is not meant to be taken as financial advisement. If you want to read our full risk disclosure statement, it's on our website at avatrade.com. And as long as we're talking about risk, if you have not downloaded the AvaGo mobile app to your mobile devices, I would suggest that you do it. Check out that app. It's much more updated than the old MT4 mobile app that is also an option to use. On the AvaGo app, it calculates exposures for you. It calculates potential profit as you're setting up your stop loss and your take profits. It tells you as you're setting up trade size how much needs to go to margin. All of this before you ever open the trade. You can have all of that right in front of you as you're setting up the trade using the AvaGo app. And there's also a nice feature called AvaProtect that allows you on pretty much all FX pairings, gold and silver, to pick protection time periods for a small premium charge. It's a flat charge that you'll see as you're opening the trade, exactly what the charge is for the coverage. And you can pick different time periods, 1 day, 2 days, 3 days, 6 hours, whatever the case may be. And any losses during that covered time period are added back to your account, and the profits are yours. The only charge for that protection against loss is the small premium charge that you see as you're setting it up. So it's something that I don't think it's right for every occasion, but for days and really weeks like we've been having with the coronavirus scare and the markets having huge movements in short periods of time, if you're protected in the wrong direction for a small premium charge and the profit direction is really unlimited, it's nice to use that feature many times. So it's something you might check out. If you haven't seen it, get the mobile app and check it out. Okay, so that's my 2 cents on AvaProtect. Maybe we'll take a minute to look at it on AvaTrade's website if we have time. So focusing on technical analysis, there are 2 main ways really that people do technical analysis. It would be either with manual methods, drawing your own support and resistance lines, trend lines, alleyways, price levels. All of these things you can do manually, and that's what I tend to do. You also can use indicators, which are helpful to a limited degree. Indicators, if you're in the right direction, give you great ideas of when something's overbought or oversold. Unfortunately, with many indicators, when the market's running in one direction, like it might be and has been today so far, when an asset, let's say, the Dow Jones has been dropping all day, if an indicator is telling you, well, it's oversold, you should buy now, it just kept dropping all day. Those would be false signals. The signals telling you to sell when there's upward movements might be right, and the ones telling you to buy today would have probably been wrong on your indicators. So I like to start with the manual methods as people are learning and building strategies, because then you truly understand what's happening, and then you can add indicators later on to give you an idea about timing of things in your preferred direction that you already are knowledgeable about without the indicator. Okay. So with that said, we'll go ahead with some fundamental review, and then we'll get on my demo account. We'll take a look at the technical analysis with some manual methods of technical analysis on the live charts. So I found some main headlines that I think everyone's probably already aware of, and then I'll give some insight a little bit further that I think might be helpful for you to understand some things as well. I think I'm going to type a message here for Chi. Everyone, just bear with me. Okay, so just so he knows, in case Chi, in case you're not hearing me, now you can read. Okay, so here's one main headline that I think is obviously important to understand. So world stocks succumb to virus fears. Obviously, we're probably all noticing that. There was the day before yesterday, the major indices recovered a bit. The Dow Jones came up 1,200, NASDAQ came up a nice number of points, etc. And then yesterday they gave it almost all back, right? Which was quite predictable, because the reason everything was plunging didn't change. Those fears still exist. Those fears of a global pandemic getting worse and worse, it's still there. And so the fact that there was a pullback, those were just people who like to buy the dips temporarily, and it pushed the market back up 2 days ago, and then boom, down it came yesterday, and more today so far, which was very predictable. So this is where, if your indicator was telling you sell after the market pushed back up some a couple days ago, well, then the indicator would have been right. When it got overbought and you sold, perfect. The problem is, yesterday when it dropped, the Dow Jones dropped 1,000 points, and other assets plunged that are equities related. If your indicator was telling you buy, well, you can see today that would have been wrong, because they dropped further today. Okay, so understanding the preferred direction based on the fundamental news before you start doing your technical analysis many times helps you avoid the false signals, whether manually doing it or with an indicator. Knowing the way the wind is blowing, so to speak, many times can help you avoid false signals when something's overbought or oversold, and know which signals maybe will be proper ones more often, because you're going in the direction that the fundamental news maybe is driving things, and then you're choosing your preferred technical entry points at that point. Okay, so we understand there's a lot of fear still. This article's from just a little while ago. It says 5-minute read. I don't think we need to read the whole article. You could if you want, but we get the general idea. Fear in the markets, stocks are dropping, which means indices are dropping. And we're not just talking one country, we're talking European indices, US indices, Asian indices, etc., across the markets. And so what we see here is they're also mentioning treasury yields. Okay, this is something that's interesting to understand. For a while, with the fear over the past couple weeks, gold was pulling back down while the markets were plunging. But what were people buying as a safe haven instead of gold? They were buying government bonds, okay, treasury notes. And so the yields were high enough, the yield being what you make if you purchase the bond, what the bank pays you, what they guarantee you. The yields were high enough and the prices were low enough that people preferred to buy the bonds rather than buying into gold at that point. And so Gold was kind of coming down and going sideways, and the price on bonds was going up. And so what do you think the banks do as everyone's wanting to buy their product? Everyone's wanting to buy the bonds. What happens to the bond price? It goes up. And what happens to the yield they offer you? It goes down, right? We looked at this earlier in the week. We looked at this Monday and we said, this is really important. We said treasury yields have dropped to the point that they're not attractive anymore to investors. And so what's the main safe haven people will buy if they're not buying bonds? Anybody, type. What do people buy as a safe haven if bonds are not attractive anymore? Yep. Many of you are typing gold. I'm with you on that. Some maybe buy into some other precious metals as well, which makes sense. We could look at platinum and palladium and some other things. But for sure, as the bond market has become less attractive because the yields are down, hitting record lows, meaning you're not going to make as much using that as a safe haven now. What happened to gold today? What's gold been doing all week now? And we talked about this Monday in Monday's webinar. It would have worked out perfect if you followed the idea that really low treasury yields and high fear on the market still means gold probably is attractive. And boy, did it pay well this week. All right, Sammy, I'm glad you got the audio up and running. Okay, so that's an indicator there. Low treasury yields, still high fear on the market. Gold looks attractive, okay? And what do we see here? The VIX index. I like this snapshot picture on investing.com. They've always got the futures, and the non-futures for the indices, and then they've got the dollar index, and they've got the fear index here, okay? The volatility index. The volatility index is up almost 22% today. It was up this morning, okay? You already could see the volatility, or some people refer to it as the fear index. When that's up and the futures were red, okay, the futures were red and the fear index was up starting even this morning, that's a sign that when the markets open in the US, stocks are going to plunge, gold is going to climb. Many times that's what happens, right? When you see that snapshot picture. And what happened? The markets opened and down went the indices, not just US, again, globally, this is happening. And up went gold even with more momentum, okay? The dollar index is down quite a bit as well. Does anyone know what the US did? Kind of a surprise move this week, earlier in the week with their interest rate. Again, a lot of countries are doing this now. Yeah, Fed rate cuts, 0.5%, okay? Before this coronavirus situation, the Feds were talking about, boy, the economy's looking strong. We don't know if we need to cut rates anymore. Then now this happened with this pandemic, and boom, countries around the world are starting to do monetary policies to help their economies out. Cutting rates is one. And if you don't understand how that works, lower federal interest rate means cheaper loans, which means the money is worth less because you can get it cheaper. If you can get more of something cheaper, then any one of them's worth less. And so the US dollar value is dropping because they lowered their interest rate by 0.5%. It already was having trouble because of the pandemic and business issues with a lot of US factories being in China and all of this situation. Apple was being hit really hard. So none of that was good for the US dollar. Then the rate cut, right? And that kind of helped the markets push back up a couple days ago. But you see the overall global effect is too strong with this, with the fear that's out there right now. You don't often see the VIX index up over 20% within the course of a single day. It's been happening maybe somewhat regularly in the past month or so because of the virus fears, but that's not a normal thing to see. Everything pure red except the fear index, Okay, so you know which direction maybe you would have preferred to have been trading today, not just now, but you could have known that starting early this morning. This snapshot was there already. And as soon as you look at that and you see that and you say headlines are bad, what? Okay, first we look at treasury yields dropping, fear rising. We see everything's in the red. Fear index is up. Headlines are about financial havoc hitting the markets. And then we see another headline. What did OPEC? What's the news about OPEC? They wanted to cut production, and Russia doesn't agree. They're not on board. So what's that going to do for oil prices if they can't agree on production cuts and there's economic fear right now that economies will slow down? What happens to oil price? Yeah, it typically falls, right? So oil price is already falling. Even when they were saying, hey, OPEC might cut production more, they're trying to work out a deal with Russia, oil was still falling because of this economic fear around the world. And now when Russia's saying they're not on board, take a look at the chart, what's been going on with oil today. Okay, very easy to get the idea of what direction you prefer to trade with your technical analysis. Okay, by looking at this. Now, just happens to be in 13 minutes, the biggest announcement of the month each month is on the first Friday of the month coming out of the US non-farm payrolls. Okay, so add into all this craziness on the market right now, and now we have non-farm payroll numbers, jobs numbers coming out in the US here in just 13 minutes. The movements are going to be crazy on the charts here in a moment. Okay, so we can see also some major announcements out of Canada all at the same time. Look at the number of announcements, a dozen, 15 or more mid, high level, low level announcements all at once. Manufacturing payrolls, non-farm payrolls, participation rate, trade balance, unemployment rate, government payrolls, average weekly hours, average hourly earnings, year to year, month to month. It's all at once coming here. Okay, so I talked about, we know what is happening. We looked at the headlines. Now we can see what is about to happen. Okay, there's going to be big movements. Okay, huge potential on the chart. So on the charts. So we've got oil plunging all day. First of all, and by the way, I'm not anticipating trying to set people up for moves right now before the NFP comes in. It's not the easiest way to trade, certainly not for beginners. I don't want to tell you set up trades right now. In 5 minutes, they're going to make an announcement. That's trying to guess the market. Okay, and you certainly could put pending orders above and below resistance levels and hope that one way or the other it breaks and you make a profit. But you know, when there's major announcements and high volatility, right at the time of the NFP announcement, there could be slippage. The movement could move 100 pips in a fraction of a second when those numbers come out, and your pending order might say buy at this spot, and it might not open until it slides past that spot a ways. And then in the next minute, it could spike back the other way with this type of announcement and this type of volatility. So it's not the easiest way to trade, to try and time the movements right with those major announcements. I'm not saying you can't do it, and you can be successful with it, but in a webinar that's mixed with beginners and also some experienced traders, I wouldn't try and ask you to try and set up on an NFP announcement with high volatility to try and squeeze profit out of the market on a quick movement that really could gap even on a live chart. Okay, so but the idea of this volatility is there are some expectations. Let's go back. Let me show you something. There are some expectations with, and maybe I need to go to the main page. Here, U.S. employment report expected to show strength before coronavirus spread. So what they're saying with this article here, they expect the NFP numbers to be good, the jobs numbers, because the numbers are for the prior month before all the fear got so bad on the market. So they're actually expecting the U.S. economy that's been spurred on by the Trump tax cuts on the corporations to actually have good numbers. So what do you think could happen with All these markets that have been plunging. Yeah, Stephen, it's me. Welcome. What do you think might happen if these numbers out of the NFP in 10 minutes are good or better than expected? What do you think might happen temporarily that could give you an opportunistic entry point for the bigger picture of fear? What could happen with the NASDAQ, Dow Jones, S&P 500 if better than expected jobs numbers come out right now? They've been plunging all day. What do you think could happen if good numbers come out in 10 minutes on NFP? Yeah, it could be a pullback up, right? Could move up, maybe drastically. But then if it reaches a resistance point, yeah, the dollar index could strengthen. There could be a bounce up on these assets that we've been looking at that are dropping. And then what happened 2 days ago when there was a bounce back up when they lowered the U.S. interest rate 0.5%? The Dow Jones gained 1,000. What happened the next day? Came back down, right? So any good news on the NFP is a short-lived momentum potentially that could give you an opportunistic entry point if you still believe in the bigger picture. There's fear, doom, and gloom on the markets for the coming weeks. Okay, so I think the opportunity with the NFP announcement doesn't have to be trading right now and trying to guess which way the movement's going to go. You could if you wanted to, but I think the longer term opportunity is if the numbers are better than expected and some of these plunging assets pop up to a spot that you like that entry point, then that's an opportunistic spot, technically speaking, to maybe go with the direction that the markets have been going with all this bad news. Okay, not to say you can't take a shot if you see this article and they're saying the jobs numbers are expected probably to be good because it's for the prior month before all this mess. If you believe that the markets have pulled back up in 8 minutes now when those numbers come out, you could take a market move now, certainly. I would limit myself, right? Wouldn't have huge exposure because there's huge movements with NFP announcements many times. And if those numbers unexpectedly were bad, they could go flying the wrong way also. I kind of like the hindsight. I don't like to try and guess the market. I wait. Let me see. Okay, if it's good news, great. Let me see if it'll go up to a nice resistance level, and then I'll take advantage of that with the bigger picture fundamental news. If the news comes in bad, okay, I'll wait for a bounce through, or a breakthrough, not a bounce, a breakthrough on a resistance level to confirm momentum down, and then get in. Okay, so you can use the hindsight of what the numbers are in about 8 minutes after they come out to then guide you as to what your preferred entry points will be. Okay, so here we are then. We've got crude oil here. Characteristically, before major announcements, you'll see hesitation in the downward movement or upward movement, and maybe even a little pullback, and it's waiting on the numbers, is what it looks like. Crude oil, what do you think happens to crude oil if NFP numbers come in really, really good? Probably bounces up, right? Where would be a spot that if crude oil started to bounce up because of good NFP numbers that you'd say, okay, it's going to meet some resistance, and maybe that's my spot to re-enter with all this bearish news in the direction I think it'll move in the longer term. And so you might look at the chart and say, ooh, here's a resistance level, because this was support, 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 and then breakthrough and plunge. So if it's going to come back up, it certainly easily could fly back up a couple dollars towards 45 and change. And if you then still believe that the bigger picture is bad news for oil, with Russia not agreeing with OPEC for production cuts and the global economy having slowdown problems from the virus, then if NFP causes oil to bounce up, at some point you might say, and that first spot I mentioned might not be the spot you want. Maybe you want this spot up here. This is a more major support level. Support, 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 support. Breakthrough became resistance. You see how that works perfectly? This was support. Once a support level is broken, it becomes resistance, and it worked right there, exactly like you'd expect, and down. So if there's momentum, if this is too close for your liking, if it's good news for NFP and you want to be more selective, Maybe you wait for this resistance level if you then want to sell. And by the way, what kind of pending order could I put up here if I wanted to automatically sell from this price? If, let's say I think NFP will be good, I'm preparing a pending order that if oil jumps back up to 46 here, I want the pending order then to sell if oil hits that spot. Sell limit, exactly, good. So sell limit, easy to set up if you wanted to. Okay, you switch from market execution to pending order. You pick sell limit in this example, you put your at price. And I'm not saying this is the price you should pick or the direction you should pick, but as an example, at price 46.16 or 17 right up here, but just before the more major resistance. And you obviously pick the trade size that's appropriate for you. I would likely put my stop loss above the resistance. If it broke through there, then wow, that's more momentum than I expected, and I get out the small loss. So maybe 46.7 in this example as a stop loss, and a take profit back down to where it is now would make sense to me. If a good NFP numbers brought it up and then it starts plunging again, it's plunging on global market fear, it easily could come back down to where it is now. So I could easily say 43.7 for a take profit. This is a scalp move. This is short term, okay, to make a quick profit. You also could obviously have longer distance before you get out as well. And so there, okay, I've got my pending order placed. So if NFP comes in, I'm not trying to ride the initial move and get caught up in the slippage and the big spikes that mess up your entry points many times, but waiting for a sustained movement that then reaches a major resistance level, technically speaking, that's an opportunistic entry point for the direction that we think in the bigger picture it will go. Okay, so trying to take advantage of potential temporary momentum in the opposite direction of the bigger movement that you think will happen. That's the idea of this strategy right now. Type OK if you're with me on that. With the placement of the stop loss above that resistance, any aspect of it if you don't understand. Okay, so, and you know, if the trade doesn't open, because it only comes up to the first, let's say it rises to the first resistance level and then drops, and you say, I had my entry point up at the next resistance level, I should have gotten in sooner. Well, you didn't lose anything, right? You were just being more precise with where you wanted it to enter. Now, you could put one at both levels. You could put at the first resistance level, this resistance level here, an entry of a smaller amount, and then at the next resistance level, if that one breaks through, then you re-enter at the next resistance level, and you could do that 2 or 3 times with another resistance level up here, each time re-entering with another sell limit, if in your mind this global economic slowdown isn't going away anytime soon. So not giving up just because the first entry was wrong or the second entry, and getting in at another entry that's even better to go with the global doom and gloom that seems to be on the markets right now, right? And I'm not saying this has to be what you would do. I'm giving you an example of how you would combine the fundamental news with technical entry points, trying to take advantage of both types of fundamental news, the short-lived fundamental news, like the jobs announcements right now, and the longer-lived fundamental news that might be in the opposite direction of the smaller movement after these numbers come in about 1 minute, okay? And we could set up the same way on gold, right? What if the NFP numbers are good? Gold might drop quickly. It could drop here, and the numbers are coming in about 30 seconds. You see gold pushing down already, okay? Gold could even drop to the next support level down here. So you could have a buy stop on gold here, or I'm sorry, a buy limit on gold right down here at the first support level. You could have a buy limit at the second support level down here in case that one breaks through, okay? And even a third one down here, right? And that's why you have a larger balance and a smaller trade size many times. So you have the flexibility to re-enter and then get the big movement in the direction you strongly feel it will go in the bigger picture. Okay, let's take a look at, and the indices we could set up the same way. I want to look at the numbers though as they come in. Yes, all of the webinars are recorded. They're on our YouTube channel. Okay, just go to YouTube, at the top, search AvaTrade channel, keyword search, and you'll find our channel. And there's a section for English webinars, and they're all recorded and posted by typically the next business day after the webinars. Okay, so what are we going to see here? The numbers came in, and we were right. The numbers are good. How did all of these good numbers come in today with all the doom and gloom and the problems with coronavirus? Because these numbers are from the prior month. And that's the article we just looked at. They said, hey, we're expecting probably good jobs numbers today, even with all the stuff that's been going on. And what did we get? We got the non-farm payroll jobs, 273,000. The expectation was only 175. It blew it away. Okay, gold's coming down right now. Gold is hitting probably that support level I drew. Okay, like we were saying, you could have taken a trade before the announcement, going with the direction that article suggested. You'd be in the money already, right? That's a short-term announcement trading. It's not something I wanted you all to try and attempt to do just because I was saying it could be done, which is why I said it wasn't something I wanted to help you set up prior to the announcements in the webinar. But certainly with some experience and some timing with those types of headlines and predictions, many times they're right. And you can get in before the announcements, and rather than with pending orders and get a quick payout. But these numbers, folks, are really good. Private non-farm payrolls, trade balance improved, unemployment rate ticked down a bit as well. And the Canadian unemployment rate, or I'm sorry, employment change was much better than expected, triple the expectation. And that's the high level announcement. The exports were not good, but that's a more low level announcement for Canada. So more mixed news for Canada. I see some other worse than expected numbers out of Canada. So by far, it's an overwhelmingly positive day for the US, mixed day for the Canadian dollar. And with oil dropping like it's been, Canadian dollar against the yen, you'd probably see more bearish movement on that. Yen being a safe haven currency, Canadian dollar just had maybe more negative news than positive, at least mixed news. And with oil dropping, oil's the #1 export of Canada. It's the largest factor in their GDP. And with oil plunging, that typically creates bearishness, downward movement on the Canadian dollar. And because we see the fear index today is up over 20%, the yen should probably be strengthening as well, which would help pull the Canadian down. Okay, so we do see from 22% down to 20. As gold was pulling down, so did the fear index. Indices are recovering a little bit as we expected. So let's go back to the charts and let's see how we take advantage of this if you didn't already. Okay, here's the first support level we drew, right, for gold. So short-term momentum, everyone is saying, wow, good news out of the US, gold pulled down. Okay, if it gets to the first support level, if you say, yeah, but there's still a pandemic around the world and major economies are quarantining huge sections of their economies, you might say this is an opportunistic entry point now and say, thank you, NFP, for letting me get in on gold at a lower point if you think gold is going to keep climbing, right? That's obviously if you think it'll keep climbing. I have my own opinion based on the fundamental news, what I think will happen, but you need to form your own. And certainly the fundamental news is showing a lot of fear on the market still. So with patience, maybe this hits this support level. What kind of pending order would buy from just above this support level if you wanted to program one? What kind of pending order buys from a lower point? Oops. Let me bring up the order window. We could go to pending order. It would be a buy limit. Buy limit buys from a lower point. Now here in a second, you might not have to do a pending order, right? It's almost on the support level now, predictably. Good news out of the NFP. Here comes gold down. If you think in the bigger picture, gold shouldn't really break this support by much, you buy off the support. You could even do a market move without it touching the support. You could do a market move whenever you want as it gets near the support, right? If you think it won't break. Now, let's say I'm willing to trade a quarter of a lot, then maybe right now I do a market buy for something less, 0.1, right? If I say, okay, I think in the bigger picture gold will climb, I place a 0.1, oops, I want to go back to market execution. Market execution, 0.1, and I buy. Okay. Now I think it could push down further, right? But in the bigger picture, I'm thinking, and I'm doing this hypothetically, right? If I'm thinking in the bigger picture gold will go up, I'm taking advantage of this entry point with a buy. Okay. Then I say, okay, if it drops to the next support level, I'm going to have a pending order waiting. Okay, pending order. This time I'll do 0.2 maybe. Okay, because if in the bigger picture I say fear is ruling the market, the lower gold goes, the more confident I am, it'll go up. Okay, so I take my first shot here that this will be short-lived momentum with the NFP. If it's longer-lived momentum than I thought, then my pending order is going to get in before the next support level, 1641. Okay, and I could put a stop loss just below the support level to have limited risk. I also could have put a stop loss on this one to have limited risk if I wanted to. That's up to each individual trader. And then I place my order, right? So I've got a market move backed up with another pending order to go in the direction that I might believe is the bigger picture. Once it gets past this, what maybe you believe to be short-lived momentum from these economic announcements that just came out. Because everyone expected, yeah, okay, it's going to be good news because it was from before the pandemic was spreading. And everyone also then is going to say, you know what? Probably the news right now is much worse because those numbers were from last month. And so probably this could be, I shouldn't say probably, this could be short-lived momentum with gold dropping and the markets rising. And you could see a return to the overall momentum that we saw all day today. Okay. And I always use the words could and maybe because I never want to tell anyone anything for sure, right? Because that's not trading. Trading is about potential. And right now, do you think there's more potential for gold to fly back up or for gold to plunge? Let's take a vote. More potential for gold to go up. And I mean in the bigger picture over the next 4 or 5 days and through the weekend, or gold to plunge. Okay, so I don't need to tell you what I think because all of you seem to have a strong opinion because you're answering really quick, right? So if that's what you believe, then you use your technical analysis to take opportunistic entry points. Okay, and if you're a scalper, I already made profit, right? Let me close and take my $20. There, I just put it in my pocket, right? Easy. Hindsight is 2020. We knew it was good news. We didn't have to guess what the announcement was going to be, right? We didn't have to guess whether it was going to be good or bad. We could have, and it turns out we'd have been right. Had we sold on gold right before the NFP numbers, we were suspecting they'd be better than expected, and they were. We'd have won on that move. But that would have been guessing the market, right? What I just showed you was reading the market. We already knew the good numbers came out. We knew gold was pulling down. We read the chart and found the support level and figured that's a spot where gold might bounce. And understanding what the bigger picture news is compared to the smaller picture news. And so this is where you can start to do short-term trading, like I just showed you. Or if I was a longer-term trade with this move, I'd have left that open. I wouldn't be out yet. Because on a longer term move, I would have no problem if it continued down here and entered this one, or even went down towards another one. If I feel the longer term move is up, I'm going to take a small enough trade size that I can wait it out to that next support level and even re-enter with another trade. Okay, and you can do both at the same time, long-term and short-term. You'd kind of double up on the profit potential. Okay, let's look at the indices and see what's happening. NASDAQ. Okay, what did NASDAQ do with this announcement? Exactly what we expected. It came up to a resistance level. Remember I said we could have drawn the same lines? So here's a resistance level, resistance, resistance. And before the announcement, we would have been drawing this line, right? Right here. Resistance level. So the first resistance level, it came up too quickly. And if you entered already, then you'd be waiting and seeing if it's going to go up higher or not. Okay. And then you could have prepared another, in this case, sell limit, if you believe the bigger news will take it back down, and that the NFP positive news, it will be shorter lived. So then you have a resistance level here. So you could do a market sell now, pending sell limit at this level, and another sell limit at this level up here, another major resistance level. And maybe your sell position in the current spot is 0.1, right? Okay, let's say you already got in. You're on your 0.1. You've got a pending order here for 0.1 or 0.2. You've got another pending order at the next level up here for maybe same trade size. You don't. I'm not a fan of doubling up necessarily when you re-enter. A small amount of that is okay if you have a proper balance to handle that. But just re-entering even with the same trade size puts you in a position that then, even if you were wrong on the first two entry points, if on the third one it even comes down to here, you can be an overall profit already with the first two not even in the money. Okay, so again, if I'm scalping, I can take my profit. There's my $59, $69, $70 in my pocket from that move. Why would I take a market sell there? Because it came up to a resistance level. Okay, it went in the temporary direction I thought it would with the jobs numbers, the economic reports, and then it's plunging off the resistance in the direction we believe the bigger news will eventually take it. Okay, now it could come back up and test. And again, if it gets near this resistance level, and I know this is repetitive, but some people are beginners, what kind of pending order could you have at this resistance level if it comes back up some? What's it called? Selling from a higher point. You program it to sell. If it comes back up to this resistance level, that is a sell limit, right? To sell from a higher point. It's a sell limit pending order. All right. And the higher it gets, the more likely it could pull back with all the fear that's in the market. And so you could think about what trade size you'd want here compared to here as you become maybe more and more certain that it should pull back. Understanding that fundamental news review that we did before we did our technicals. So type OK if you understand what I'm doing here, how you can avoid false signals in one direction and be more likely to have true signals in the opposite direction by putting your technical price levels, your resistance levels, support levels for your entry points and going in the direction that the news tells you maybe you should. Okay. It's not a coincidence that I did two simulation trades and they both won, right? We waited till it was on. We waited till gold was near the support, and we did a hypothetical trade up, and it was a winner. Why? Because it bounced in the direction that the bigger news says that it probably should. And then we did the same thing here with our indice, with the NASDAQ, waiting till it got near a resistance level right here. It tested it a little bit. We could see it came back under the resistance, and then that's when I entered it. It was showing a downtrend below that resistance level. And now you can wait because it likely could come back up some more before a bigger move down could occur. There'd be multiple. Right now, you could sit on charts watching the NASDAQ, S&P 500, Dow Jones, oil, and gold, and you could play this game the rest of the day. Yeah, Melga, let me type a message. She's saying that they can't hear. Okay. Type okay if you're hearing me. I'm assuming it's only Malga who can't hear. Okay, good. We're up and running still. All right, so any questions at this point? Questions, input, comments? Let's bring gold back up and have a look. Okay, so that's a 5-minute candle. Let's go to the 1 hour. There's the support level I traded up off of. And talk about perspective, right? Talk about perspective. All right, this was the trade we already profited on, coming up off the support as a simulated trade here. And on the 1 hour candles, it looks like, okay, that was a small movement. Look at the 5-minute candles. Look what that movement really was, right? So it made sense after those good jobs numbers that gold made that movement down from 1689 all the way down to 1671. What, almost a $20 drop in gold in 10 minutes time, 15 minutes time. So that was expected with good news out of NFP. What also was expected is that this support level might have held, which it has so far. It bounced once, brought us an easy potential profit. Longer term trader would still be waiting because this is really the first major resistance level right there. Back up 1687 or so might be a spot where if you're still in on a buy position here, that might be a spot, technically speaking, that you'd take profit on gold. And even if you entered now, the risk is only to the underside of the support if you use stop loss. You could put your stop loss down below the support and take profit up here, which is about 2 or 3 times potential profit compared to what you'd be risking. Or you could place a pending order, right? You could place a buy limit, and if it hits this support level where we drew the line, then you're in. Okay. Takunda, you're asking how efficient are the support and resistance levels. Look at the chart. You tell me. Let me draw some lines, and we'll end on this today. Let me draw some lines. Resistance, resistance, resistance. Each time that it hit this resistance, if you were selling, you'd have profited one out of 1, 2 out of 2, and you'd have lost once here. So you'd have won twice and lost 3. I'm sorry, won twice and lost once. That's profit, right? Also above the resistance. The other part of that strategy is if it breaks through the resistance, you buy. So now you would have won once on a selling from the resistance, twice selling from the resistance, lost the 3rd time selling from the resistance. It breaks through, it hits your buy stop above the resistance, and now you win on this one. So that's 3 out of 4 winners. Okay. Then once it formed a support level, it didn't hit any resistance, so we wouldn't have been selling. Then it was support, support, buy, winner, support, buy, winner, right? You see, if you look at these price levels, support, resistance, some traders are pure technical. They don't care why it broke through the resistance. They just know I have a buy stop on up here in case it does break the resistance. There must have been a reason for it, and gold will likely keep climbing, and there it went. Okay, the same thing we said, if gold hits the support level, we bought off of it and it bounced. And if it breaks through the support, you could sell. Okay, if it breaks the support, then the news is taken as stronger. That good jobs numbers, maybe gold breaks that support, then you're selling. When it reaches the next support level, my pending order is already waiting. It's going to buy. Okay, so these price levels work very well. Have I sold yet? If this bounces up, I'm not losing because I'm only selling if it breaks the support and hits my sell stop. Okay, you won't win every time, but you can win more times than you lose if you hit proper timing with these entry points. Any other questions? By the way, we can see it just bounced off the support a little bit. Another scalp move, just like my first one, it would have already profited. It just bounced $2, $3 off the support. It touched it and up it went again. It might break it, by the way, but you could profit 3 or 4 or 5 or 6 times bouncing off of it before it breaks. And then the time you're wrong, your stop loss gets hit and you're in on the sell stop, right? If you're wrong. Okay, let's leave it with that. I think if you have the time to sit in front of the charts today and pick your entry points based on these price levels, support, resistance, and going in the direction that you think makes the most sense in the bigger picture, I think you can find a lot of success here. Good luck with your trading. I hope to see you all on Monday. We'll be back later in the day, 6 p.m. GMT time on Monday, okay? All right, have a good weekend and good luck with your trading today. Bye for now.